We are now going to sort of dig into compliance now, where this is a challenge for many DeFi platforms, is the whole compliance piece. What Dan has offered is something that can really do it in a global way. But what we want to do is have bank grade compliance, and that's what we're going to talk about in this next session. So please join me in welcoming up. We have Erica Stanford, who will be leading this session.
Cool, everyone. Thank you for joining us. Joined here by Charlie, founder of ComplyAdvantage, and Marcus, I think, founder of Luno. Compliance in crypto. So, I mean, interesting subject. I spent a year and a bit for purposes of writing a book about crypto scams, researching Ponzi schemes and the dark web and hacks and so forth, and hanging around at police offices to look into the darker side of crypto. So I think it's probably worth noting that crypto isn't all sweetness and light. There are scams, there's frequent hacks, there's a lot of problems in the space, and there's a lot of companies that are trying to do good and make crypto as safe as possible, and these guys are part of that. So constant sort of problem in crypto. Do crypto companies want to be fully decentralized? There was some cool conversations about that earlier. And there's a lot of ethical belief about the benefits of full decentralization, but you can't be fully decentralized and be 100% compliant and have KYC on every user. The two don't work, so there's got to be a balance between the two. But looking at how to bring sort of bank-grade compliance into crypto, both of you, what does that even mean? How can a crypto company bring bank-grade compliance and bring sort of max security at a time where there's not even a regulation to say this is exactly what you need to do? Marcus, how have you been?
Sure. Look, I've been in the industry for almost 10 years now, and to your point, certainly in the early days, there was a very strong ideology around non-compliance, decentralization. But as the industry professionalized over time, and I know people might smile and say professionalized, it's maybe a relative term, but a lot of new people came into the industry that realized that the only way this was going to move forward was to do things according to either existing regulation or to help get regulation in place where we can move the industry forward to build trust with consumers, with regulators, with society at large. And for us, my background is in banking, and so for us, from day one, we were already building compliance systems. It wasn't even a discussion. And there was a small group of us that operated like that, and over time, that group has gotten larger and larger. I think, like you say, it's a big ecosystem. There are still a lot of people that don't care about it. The unfortunate thing is a lot of companies say they care about it, and on their website they talk about compliance. At conferences they talk about compliance, but when you go into the businesses themselves, it's very clear that there is no compliance culture. They don't really care about it, which is, I think, where banks and regulators are going to have to do a bit more work to filter out who these companies are, and who the good actors and the bad actors. But what I can say maybe is just for those that are the good actors, I would argue that the level of care and the level of compliance is the same, if not higher, than most financial institutions. Partly because our industry is under so much scrutiny, the bar has to be very, very high when we do engage with these parties. But also we have third-party confirmation from auditors like all the big audit firms that I'm not going to name now, but that come in and audit our systems, and also the banks, and they can tell us objectively where we stand in relation to the others. So there's a lot of positives, but it's a bit of a diamond in the rough situation, if that makes sense.
Great answer, and it's awesome to be here, and awesome to see so many huge compliance fans in the audience. I was just wondering how many people in the audience are actually involved in compliance or have kind of direct experience of this now very sexy area. Any hands? So there's like five people or so who kind of are involved in compliance. So yeah, I guess for people who kind of aren't necessarily heavily involved, like Marcus, in day-to-day war against terrorism or fraud or money laundering, I think for many companies, the big challenge is seeing banks who have huge armies of developers and analysts and hundreds of years of experience fighting this war, and crypto firms coming afresh and having to really try and reinvent the entire way that compliance can be done. And in the same way that Marcus, I think, aspires to democratize access to crypto, as we saw with Marcus's huge advertising blitz on the tube about a year ago, which brought in 5 or so million people into Luno in London alone. At ComplyAdvantage, one of the aspirations for us since day one has been to democratize access to the same tools that banks and other firms have had since day one. So we now have about 1,500 firms like banks, payment companies, crypto firms who are using the tools that we're providing to try and fight that war. We now have a scheme called Comply Launch, where we can give firms free access to databases of terrorists and money launderers and criminals on day one that other banks would pay hundreds of thousands of dollars for. So I think part of it is giving the same tools as the big banks have to startups and fintechs and crypto firms like Luno, but not for the same cost, which would bankrupt any aspiring crypto firm.
I think that's a good point, by the way, because the one advantage that the crypto companies and actually the broader fintech industry have against the financial institutions is that we are able to build our compliance stack basically from the ground up. We can use all the base tools like ComplyAdvantage. There's a few others that we all plug in. We've got new tools that's very specific to crypto that you don't get outside of our industry, and so we can do compliance, I would say, more efficiently, more cheaper than most larger institutions, and so. That's also something we try and get regulators and banks to embrace, to say, here's an opportunity to actually showcase how good compliance can be done at what a low cost it can be done. Because as we know, for a lot of existing financial institutions, it's a massive headache. There's a lot of bureaucracy and cost that they don't want. And we have the data to show it can be done in another way.
And I mean, going back to that controversy about sort of compliance versus decentralization versus regulation, who do you see compliance benefiting? I mean, is that what you see as bringing crypto to the mass market? Is that what you see as keeping people safe and stopping falling victim to scams and stopping being able to send money to scams, for example? Is that what you see as one of the main benefits? Or do you think in large part crypto companies are basically doing this to appease regulators and to keep going, or is this what you think is what really keeps users safe?
No, it's a
and
good
benefits users?
It's a very good question. I think certainly it depends on what your business model is. So so we focus on mass market consumers. So for us, it's critically important from a business success point of view that the industry gets regulated. So that means having regulation will help us get more bank relationships. It will help protect consumers a lot more, both from an education point of view on who to use. It'll kind of filter out all the bad actors. So I think mass market consumer, I think it's like a slam dunk case to have really, really good regulation. There will be some players that maybe do more like institutional stuff or back office type of blockchain, crypto stuff where maybe for them it's not that important. And then, of course, the ones, you also allude to, like, people basically whitewashing, their companies with pretending to appease the regulators. So there will be that group as well. But I think within the mass market consumer space, I would say most serious companies, and when I say serious, maybe there's like 4 or 5 globally, that unfortunately, but they also have the most customers between them, right? So I think they are pretty serious about it. But then there's always like 1 or 2 exceptions of really big crypto companies with mass market consumers that don't actually take it seriously. So, but I do think it's a genuine benefit. And just maybe just one last point. We've seen this. The EU and the UK has been quite slow to regulate crypto compared to, for example, Southeast Asia. We've got countries like Malaysia, where we worked with the government for many years to get regulation in place. They put regulation in place. And you can immediately see how that changes the whole ecosystem in terms of everything from consumer protection to consumer knowledge and also adoption throughout the country. And so there's very clear data to show that when it is in place, it is actually better.
Yeah, I'd say in terms of do crypto firms really want to do compliance, I think by far the largest problem that Pablo Escobar had wasn't getting the cocaine into Miami, it was getting the money out, right? And for anyone that's seen Scarface, there is huge amounts of money in laundering money. And if someone comes to you and says, if you can launder the money, then I will give you, say, 10% of the cash as a spread, as a fee. Then that's obviously hugely lucrative and a very good business, right? I guess similarly with Russia, with Ukraine, there are huge states out there that need to effectively avoid sanctions and fund terrorism, right? So, and it isn't just crypto that has this problem. It's every industry, every geography. In the same way that water eventually flows downhill, there's this huge force out there in society whereby criminals, money launderers, all want to find a way to be able to launder the money. So crypto is simply a kind of victim of that and has to resist that huge pressure. So internally, the actual compliance analysts are often hugely passionate, and when you talk to them, they themselves see themselves as fighting this war against all those threats. So even though they could go to the dark side, accept huge amounts of money for laundering cash, they themselves have to fight that war, even though it isn't necessarily for their direct financial benefit.
I mean, and some of what we were talking about earlier, and what you just touched on, North Korea have got some of the best hackers in the world. They've managed to steal billions of dollars of crypto and haven't managed to cash it out, sort of notoriously. A report I read last week, Russia and pro-Russia military groups have received $4 million in crypto donations to fund the invasion. $4 million, yes, that's a lot, but as a percentage of all of Russia invasion, that's a tiny, tiny amount, and also tiny compared to what Ukraine has received. How big a problem is it? And I guess my question would be, if you've got one crypto exchange or platform that becomes fully compliant and checks and blocks it off, will those hackers or terrorists or whatever just go to DeFi platforms that have seen a huge increase in money laundering? So will they just find platforms that aren't going to be compliant, or is it just too hard to get the money out?
Yeah, I think the one good point that you raise is like, what are the numbers, right? What does the data show? Because crypto is very emotive for some reason. People read articles, you'll read an article, Russia has crypto. How much? $4 million. That's like neither here nor there in any financial system, right? It's like completely negligible. And so the bar, for some reason, for the crypto industry needs to be 0 fault. And for everyone else, it's like there's some materiality level, which makes it very difficult. So I think a key thing for us all as industry participants, whether you're working in a bank or in government or in a fintech company, is let's bring the data out and have people discuss these numbers. Because when you look at the numbers, I mean, Charlie might have a stronger handle on some of the stuff that they're seeing internally. But it is, in most cases, it's a lot smaller on both the absolute and relative basis than the problems that we see in the existing financial system. In fact, I would go as far as saying, when you see statistics on like anything with crypto, it is, unless it's really, comes from a really good source like ComplyAdvantage or Chainalysis, most of the time it's over-exaggerated, both the positives and the negatives. So I just saw this morning there was something about some study in the Canada with, they say 13 or 15% of Canadians now have crypto. I keep on hearing 30% of Nigerians have crypto, or 50% of Malaysians. We are in these markets. We have the biggest user base. We know how many people use it, and these numbers are completely wrong. They're way over-exaggerated. So I think, as a starting point, like get down to like, what is the truth? What does the data say? And then that's kind of your starting point. And to your point, do people then, when you have these regulated entities, do they skirt and go somewhere else? I can tell you now, the people that do it for nefarious purposes are a long time ago, 5 years ago, not using any of these exchanges or more reputable players. Nothing is impossible. I was joking and said, if you want to cross the river and there's no bridge, you can still get across, but it's just not very convenient. So it's like any crime, it's just the bar for doing it becomes a lot harder. But there will always be money laundering in crypto, as there will be in financial services. There will always be some form of terrorist financing. It's just about what is the risk versus benefit of the system that you've built. And I would say right now, from a risk versus benefit point of view, crypto is probably way more attractive from a protecting society point of view than what most people think. But again, there will always be an anecdote of someone who did something bad in crypto that people think, oh, but that proves the counterpoint. But again, when you look at the numbers, it's relatively immaterial.
Yeah, I think echoing Marcus's points, I think philosophically it's impossible to know how big something is that you have no idea actually exists, right? In terms of if a tree falls over and no one sees it fall, then did that actually ever happen, right? So I think what you do find is the same mechanisms for laundering money and financing terrorism go from offline to online, from kind of banks to crypto. So, for instance, if you want to pay someone in Russia huge amounts of money instantly, then often what happens is you have criminal gangs that will have cash from prostitution or drugs, and they want crypto. And so what will happen is you can call someone and you can get the cash given to you in huge quantities physically, so long as you then can transfer the crypto to the intermediary gang. That gang then gets the crypto, which ostensibly comes from you or is completely clean. So that would never appear in the actual stats. The only reliable mechanism we have to understand how big the actual trend is the actual cost or spread. As in, if it's very easy, then they'll charge much lower rates, say like 5 or 2%. If it's very, very hard, they might charge upwards of 30%. So actual metrics are notoriously hard to come by.
Yeah, I mean, I keep consistently hearing that if you're going to buy drugs, commit crime, whatever, using Bitcoin or using crypto is probably the stupidest way to do it because of that, and everything ultimately will try and go back to cash. So, I mean, one question to go on that, in a world where there's no clear regulation saying you've got to do X amount of checks, you've got to go back X amount of transactions, you've got to check the history of a transaction, X amount of transactions back, how is that determined? Are crypto companies just effectively, do you see this as just deciding their own, we're going to check a transaction, back X amount of checks? I consistently at CMS, the law firm where I work, that's a source of contention. How far do you go? Is that up to crypto firms? Is that up to regulation to decide? Who decides how far you go back to check and be compliant?
I think there is a bit of a misconception that crypto is like not regulated, because other than, obviously there's some countries that have already regulated it. There's the New York BIT license, there's Malaysia, we're seeing the same coming through in Indonesia. We've got a few other things bubbling up in Europe. But other than like specific crypto regulation, there's also things like FATF. There's also within countries, typically when you register a company and you provide some financial services, there's some financial intelligence kind of, depending on the country, some local authority that you register with where there is an expectation to self-regulate. And then the other thing that I think a lot of people might not realize, but over the last couple of years, the biggest source of regulation for the crypto industry has really come from the banks, because banks have such a, they've just de-risked so massively across the board. And so crypto is a kind of very high-risk thing for them. So to have relationship with crypto companies, which is notoriously difficult for a lot of crypto companies, they enforce a lot of standards that they see as a minimum standard, which would be over and above typically what even a regulator would require. And so they force a lot of, are you KYCing? Are you doing your PEP checks? Show us evidence that you're doing it. And so all of these things are layered. And again, a lot of companies self-regulate. We get third-party audits. We provide it to the banks. We show it to regulators as we negotiate what a regulatory regime could look like. So there's a lot going on in the regulatory space. So just because it doesn't say it is regulated in country X doesn't mean that these things aren't happening. But again, is there a way for you to not participate in this entire kind of momentum of regulation? There is, and there are some companies who do it. But it's becoming increasingly difficult. So I'll give another example of Malaysia, where it is regulated. The regulator said, if you want to do business in Malaysia to Malaysian citizens, you need to have a license. You're not allowed to do it from offshore, because they typically do it from offshore. And so a couple of them just continue doing it from offshore. And then you go, well, what's the point? Because they can't be stopped. The regulators have now gone so far as actually blocking IP addresses of these companies that are onboarding local customers. And that's taken out, let's say, 2 or 3 of the bad actors, but there's still one left that somehow is getting around the IP and people using VPNs. But over time, you can see their market, the market share is shrinking. So with the right regulation in place, you can actually over time, I think, get to a point where it's a lot better than it is today. But yeah.
Yeah. I say in the long term, the kind of fundamental macro trend is towards tighter and tighter regulation with much lower and lower thresholds year on year. So every year you see more and more industries and companies and geographies being regulated with much lower thresholds per transaction. And irrespective of that, the kind of fundamental pillars of any compliance regime, and most of the audience haven't necessarily interrogated what this means, it's going to be, is this person who wants to be a client who they say they are? Then secondly, are they bad? And then when they transact, is that transaction behavior indicative of risk, right? So entity-based risk, as in, is there some sort of history of adverse media, or are they sanctioned? And then behaviorally, is this indicative of some sort of like cuckoo smurfing, or are they trying to deliberately circumvent thresholds? So for anyone who's aspiring to build a crypto company here, those fundamentally have to be the main vectors that you invest in. And operationally, what you see typically is most crypto companies will have something like 40% of their overhead and cost, aside from marketing and customer-facing operations involved in that. So compliance is like fundamental to the kind of art of scaling a crypto company.
Yeah. And one of the questions frequently posed is it going to come down to banks to do custody of crypto and digital assets? And some are starting to look at that. Do you see that as being a realistic future? And looking into, banks have infrastructure, they have security setups in place, far more than, if you look at the startup side of crypto, far more than any of those crypto companies do. And I mean, you're an example where you've grown and have had to build that out.
I mean, so before we built a consumer product, we were actually, our business 8-9 years ago was building crypto systems for banks. And at the time, we built it for the biggest bank in Africa, a fully custodied solution. Customers could log in with their customer details and buy and sell crypto, and worked with the regulators and the bank's compliance teams. And we announced it actually at a tech conference in London in early 2014. And long story short, it was probably the worst time to announce anything to do with crypto and banks, because it was, the wild west of crypto was, it was Mt. Gox and Silk Road. So everyone kind of backtracked on the thing. But the point is, like, we spent probably a year or two after that working with a lot of financial institutions across the world, Australia, UK, US, Europe, dealing exactly with this stuff. Like, how does that fit into a bank stack? Where, are we going to work? And so over time, we realized the banks were going to just take too long, and we just built a consumer product. But we are still close to a lot of those financial institutions, and we've watched them over the last 7 or 8 years, what the progress has been. And on the custody specifically, it keeps on. A lot of them have either built stuff internally, like just where they toy around with, not a lot, but a small percentage, right? Let's say 10%. Are they toying around with it? They're playing around with it. But we've seen the moment it gets to, it might be signed off by the exco to say we want to do this commercially, but the moment it gets to getting signed off by the chief compliance officer, it always just goes back to, is there regulation in place is the big issue. So I doubt most banks are going to do anything unless there's very clear regulation in place, unless you're like a tier 3 bank that's really, wanting to get a new customer base and go big or go home kind of attitude. But the other thing that's also becoming a problem is like the custody, as much as I think it makes sense for banks to hold custody, given people already trust them, most of them don't have the ability to build it themselves, and so they're going to have to outsource it, and that for a lot of banks, that's very risky. And so you go, okay, well, am I going to really have all my customer deposits at some third party? And even for the ones that can build it, from a capital requirement point of view, they're going to have to hold like their assets like 1-to-1 fully backed on that. And from a balance sheet and a capital requirement point of view, they might take a big penalty in terms of their capital requirements, and it might not be financially make sense for them to do it. So I think it makes sense from a consumer point of view. I think it'll be a great product. Whether institutionally banks can do this at scale in the next few years, I think it's a lot harder than it seems, to be honest.
Yeah, I think to add to Marcus's point, in the past kind of 10 years, you've seen this kind of Cambrian explosion of every type of fintech, every type of wholesale infrastructure, consumer play, and you see kind of cycles of bundling and unbundling, whereby rather than banks building this kind of infrastructure themselves, they'll partner with a Luno or someone else who can do it far better and are able to gain scale because they work with multiple partners. I think especially within custody, given the number of hacks you've seen the past year alone, banks kind of struggle to keep their platforms like live, let alone secure and fend off like their entire infrastructure of North Korean hackers, given there's like trillions of dollars of bounties on the blockchain that can be stolen immediately.
Yeah, no, thank you. We've got a question come in. For those looking at building crypto companies now, where should one start with regulation and compliance? I mean, the first thing I'd see from possibly a year of sitting inside a law firm is go talk to lawyers, because they can soothe out a lot of the difficulties before you get to them.
Yeah, I mean, it's kind of a no-brainer, right? Like, I think 3-5 years ago, you could still have a debate about how important compliance is. I think it's literally, like Charlie was saying, like the amount of, when you think about building your company, you're going to have to put 20-30% of your budget into hiring the right teams from day one, using all the best tools from day one. It's a key part of your strategy, the same as your business model, your pricing, and so on. And it's going to be expensive, very expensive, but it's going to hopefully pay off in the long run. So I just start off with the best kind of partners and tools, to be honest. Like, we had an issue where a lot of banks we were dealing with wanted like all the compliance companies and that they were used to seeing the logos of those companies, and they were like, oh, but we want this, and we would say, but here's 2 or 3 other tools that are better. They minimize the risk even more, and why we should rather use these. And so that was quite a process. But bottom line is, don't get drawn into, oh, this is what the banks are going to ask you to do. Use the best tool for the job, maybe like ComplyAdvantage and 2 or 3 others, and then build from there. Otherwise, you're going to end up creating even more bureaucracy in your company. Your compliance is going to cost more than banks, and that's not where you kind of want to end up.
Yeah, I guess there's both the infrastructure and the kind of team and culture, and particularly for those people who are kind of founding crypto companies, I think you've seen in the UK particularly companies that try and go to the crypto asset register really struggle. So I think both publicly you have to lead by example, and privately you have to be able to articulate and get the right people who can lead to a culture which is going to be amenable to the regulators, ushering you into the kind of inner sanctum of companies that are allowed to operate. And then also you need to kind of architect the right systems that can scale, because I think if you want to achieve the same scale and breadth globally and as a company like Luno, then really all the kind of non-functional requirements like latency and scalability can be critical, in addition to the kind of qualitative shifts around, are you onboarding the right people and companies?
I mean, you were joking about when we started is, compliance being sexy, but I can tell you now, if you're a founder of a crypto company and you don't think compliance is at least a little bit sexy, then it's almost a non-starter for you, right? That, like, you're talking about compliance culture. It needs to come from the CEO, the founders, the founding team. If that's not there, then all the best tools and the team in the world is not going to make a difference.
Yeah, and we're definitely seeing regulators crack down on those that aren't, so conscious of time. Everyone, thank you very much. Thanks, Charlie and Marcus.
Fantastic, thank you.
Thanks.